Welcome back to the Crypto Clown World podcast. I'm your host with the honks, Jason Bruce, honking back in. Format's going to be a little bit different this week. I just want to ask you all real quick before we get started. Make sure that you honk the like button on the way in. If you haven't for any reason, make sure that you're subscribed to my channel. Hit the bell for notifications as well. We'll notify you when new broadcasts are available. With that in mind, I'm going to flip it over to my co-host, Mr. Christopher Lundy. He's going to give you the news this week, and I'll be back for TA in a little bit. Thanks, everybody.
Good evening, ladies and gentlemen. Welcome to the Crypto Clown World podcast. Today's date is Sunday, October 20th, 2024. In today's episode, we will be recording two separate sections. I will be recording the geopolitics section, along with all the stories, OSINT, and everything else that needs to be brought forward to the table. And at the end of today's episode, Jason Bruce, my co-host, will be presenting technical analysis to the audience. And let's kick off with our top story for the day, which is going to be coming from Mexico Business. And the title of the article is Mexico Faces Broad Labor Shortage, Starts Pilot Program for Migrant Workers. Now, a study by the Employers Confederation of Mexico, which is abbreviated Coparmex, found that 75% of employers in Mexico say they are struggling to find workers. Now, after this talking point, ladies and gentlemen, it's pretty obvious to me that this outsourcing and offshoring of jobs situation going towards Mexico is coming to an end. Why? Well, how are you going to be able to produce goods for any market if 75% of employers in an entire country can't find workers to work for them? Well, that probably means that they're no longer available, meaning that they're dead, right? So in the context of the inoculation damage, I would expect this trend to increase, and I also expect to see more aggressive pushes for pay rises in relation to these worker shortages and even potentially human trafficking to fill them, as we discussed and as I discussed in last week's episode in regards to actually it was 2 weeks ago that I discussed in regards to the problems of no Americans at factories in the United States, and they were being placed there undercover. Continuing with more talking points from this particular article. So for decades, Mexicans crossed the border to pick Americans' lettuce, grapes, strawberries, etc., but now the country's running short of farm workers. And the reason why is because the workforce in agriculture is graying quickly, meaning they're aging. Nearly 3/4 of Mexican campesinos are over the age of 45 years of age. So, and most young people are turning up their noses at farm jobs. They don't want the jobs. And those who are willing to do migrant work have other options. Now, the U.S. appetite for made in Mexico goods, which ranges mainly from avocados, tropical fruit, automobiles, airplane parts, etc., is growing so fast that it's straining the workforce that produces them. So it's not that the capacity isn't there, it's that the United States is doing anything it can to get cheap goods to market because of the inflation situation continuing. And the problem is particularly acute in agriculture because the companies that put berries in American staples, such as Driscoll's, Nature Right Farms, etc., they work with growers on both sides of the U.S.-Mexico border and take advantage of different harvest seasons because the growing season is significantly longer in Mexico. You can grow almost any tropical fruit under the sun, even in the mountain ranges of the western parts of the country. And while wages in Mexico remain well below U.S. levels, employers are hoping some migrants might be willing to swap the American dream from a Mexican one, which is bizarre that it's come full circle from NAFTA. There aren't people streaming over the border for jobs because the cost of living is so much more extreme in the United States and the inflation quotient isn't washing anymore. So those looking for a better life are likely to find it in their own country sooner rather than later, ironically, ladies and gentlemen. But skipping ahead to some talking points about the automotive industry, and I'm going to close off this first talking point with those, is earlier in 2024, Toyota was forced to repeatedly halt production at a Mexican automotive plant after local labor shortages snarled output at suppliers. And that was an issue with the parts supply situation. It wasn't just an outage, it was labor shortages on top of it. And these delays have prompted Toyota to actually postpone the start of production of electric vehicles in the United States by 6 months to around June of 2026. So we've got delays that are going back multiple years as a result of these labor shortages in Mexico. The capacity simply isn't there to pick up anywhere else. And because of the situations with the wars and everything else, how are you going to be able to keep an economy functional whenever there is a problem there, right? So I think that the narratives are going to change in terms of people looking for good jobs. They still repeat those talking points on many establishment shows, but they're not going to be able to cover that up for much longer, unfortunately, for them. Moving on to our next talking point, and this one comes from Zero Hedge, another consistently used primary source. I wanted to preface this point in this article, ladies and gentlemen, to say that anytime that you're doing geopolitical research, it's crucially important not to believe everything that you read, right? And stay focused on what needs to be done to gain the proper pieces of information that you can, veritably, realize that are, factual. So, and this is more about the automotive industry to dovetail off of the last talking point from the previous article, and this is published on October 14th, and it's entitled "Goldman Issues Grim Outlook for AutoZone, Citing, quote, significant exposure, close quote, to struggling working poor consumers." And here's the leader. Continuing the theme of low-income consumers being financially under pressure, Goldman analysts told clients this AM that their decision to downgrade auto parts retailer AutoZone from buy to sell was primarily on the challenging macroeconomic environment for consumers. Now, this is a pretty significant downgrade to simply go from buy to sell. It's like a binary on-off switch, right? It's usually buy, sell, and neutral. There is no neutral zone here. There is no neutral zone in AutoZone. And there's no neutral gear, apparently, in this truck. Continuing, Goldman's Kate McShane led a team of analysts who said AutoZone will likely see muted growth over the next few quarters. She noted that the auto parts retailer's customer base is highly exposed to working poor consumers, which elevated inflation and high interest rates could crimp spending from this group and impact sales through winter into early 2025. And this is a quote from their report. Quote, "We are lowering our fiscal year 25 estimate to 150.76 from 152.21. That's US dollars, by the way. Largely reflecting our outlook for muted growth in the next few quarters. And that dollar amount is the price per share, ladies and gentlemen. We are also lowering our fiscal year 26 EPS estimate to $161.38 from $165.39, lowering our fiscal year 27 EPS estimate from $173.64 or to $173.64 from $179.73 due to a lower base from our lower estimates in fiscal year 25. So there's 4 key points to consider here from the article. 1, the lower income consumer to which AutoZone has significant exposure will likely remain under pressure into 2025. 2, as cars become more affordable, we see increased risk of a lower amount of repairs. 3, per 100x, AZO's NPS and NPI scores have been on the decline, with AZO's NPI score approaching a 3-year low. 4, we see increased risk for higher interest expense and or reduced share repurchases with 2025 notes coming due. So basically, the kicking of the can down the road has led to the end of the road for AutoZone, ladies and gentlemen. While they're not facing, persistent fiscal crisis, their primary customer base is basically squeezed. And there's also a warning that was issued that I'll briefly cover here, that the American consumer is running out of money. And this is a bad sign, considering that most of our economic activity comes from buying things, which is a great way to set up an economy to fail, because when you consume more than you produce, and especially in large quotients, you're not going to have a functional economy for very long, unless you do something to correct that imbalance. But there are quite a few charts in this, but from the end of the article, I'll just speak to the last talking point. The biggest takeaway is that low-income consumer stress only worsens into the latter parts of the year and will worsen into 2025, into early 2025. And according to the article, quote, "We cited a Goldman note on Friday that showed rich and poor consumers were undergoing trade-down trends," close quote. Yeah, trade-down trends. Well, there's going to be a lot more do-it-yourself or DIY in the economy, ladies and gentlemen, whether it's fixing your own car, fixing your own equipment, building your own houses, because the supply isn't there anymore, and people simply can't pass the buck. So I expect older cars, especially classic cars, to be restored, because they're less expensive even when fully restored to purchase in many cases, as well as mid-grade older technology will be repurposed. So the irony is that you're probably going to see a situation where people are driving around in cars and you're going to think you're in Cuba in 10 to 20 years' time in the United States, because people are going to start fixing the things that they have, because they aren't going to have another choice. Moving on to our next talking point, and this is going to be coming from the cradle, and the Levant just continues to become even more of, well, from powder keg to frying pan to fire, as it were, ladies and gentlemen. And we've seen, now, this is from October 14th, and the title of the article is "Spanish Prime Minister Calls to Suspend EU-Israel Free Trade Agreement." And this is across the entire bloc, ladies and gentlemen. Prior to showtime, I did also notice that the Prime Minister of the of Ireland, the Republic of Ireland, Simon Harris, today announced that he will be suspending all trade with Israel effective immediately, and stating that they were done waiting for others on this, essentially, paraphrasing. But those voices are starting to grow louder, and I think that pressure is being brought to bear in a way that's going to enact some pretty serious changes before we think they will. Preview the article is as follows. Prime Minister Pedro Sanchez of Spain also called for an international arms embargo on Israel following its attacks on UN troops in Lebanon. Here's the leader. Spanish Prime Minister Pedro Sanchez on October 14th urged other members of the EU to suspend the bloc's free trade agreement with Israel in response to its war crimes in Gaza and Lebanon. Spain and Ireland are asking EU countries to suspend the EU-Israel Association Agreement on the basis that Israel may be breaching the agreement's human rights clause. May be breaching. Interesting. Well, it's fairly obvious that we're seeing some pretty significant human rights abuses, especially with the firebombing of Jabalia refugee camp in Gaza not long ago, which I believe happened after this article was published. Continuing, Sanchez's comments come days after he urged the international community to stop selling weapons to Israel, citing Israeli attacks on troops belonging to the United Nations Interim Force in Lebanon, abbreviated UNIFIL, based on the Israel-Lebanon border. And a couple more talking points from the article, and then I'll stop here. Bild magazine reported on October 14th that, according to sources within the German government and security circles, Minister of Economy Robert Habeck and Foreign Minister Annalena Baerbock of the Green Party have been blocking arms sales to Israel for months. While publicly stating that no prohibition on selling arms to Israel was in place, Bild sources claimed that the Green Party politicians had refused to approve new arms sales until Israel agreed to provide a written pledge that, quote, weapons coming from Germany will not be used for genocide, close quote. So we've got a 180 here, ladies and gentlemen. On the one hand, we've got everybody, clapping in lockstep, saying they stand for Israel, and now they've done a 180. And this reminds me of the 180 that Donald Trump and his cohorts have done in regards to cryptocurrency. So, but I also think that there's a sea change here, ladies and gentlemen. There are some other geopolitical analysts that have commented that after the destruction of Mossad HQ in northern suburbs of Tel Aviv, that potentially blackmail material was destroyed, which means that Israel no longer has the same type of leverage that they once did. So that is not confirmed, though. That is a hypothesis. And I think what's more likely than that in this particular time is that we are going to see and have been seeing a situation that will and has resulted in more people turning their backs on the Israeli regime, and mainly out of not just bad optics, but because of complicity. And we are going to see more of these types of stories in the coming weeks and months, ladies and gentlemen. So be prepared for that. Next talking point comes from Rise of the Global South, which is an OSINT feed that I continuously look at from time to time. It tends to be snippets of articles rather than links to them directly. So this one is quoted from the Financial Times, and the article is entitled "Israel, quote, running out of Iron Dome ammunition." And a few talking points here. The U.S. is rapidly moving to plug gaps in Israel's defenses, including by deploying a THAAD missile system, which is Terminal High Altitude Air Defense. That's what THAAD stands for. And each of those missiles, well, they take a significant amount of time. It takes 1 year just to manufacture enough missiles for just one battery. So military-industrial complex is underproducing. And with Boeing facing financial, shockwaves, this is bad news for the military-industrial complex. And we may see nationalizations of these companies. It's entirely possible. Continuing, quote, if Iran responds to an Israel attack and Hezbollah joins in too, Israel air defenses will be stretched, close quote. Dana Stroul, former senior U.S. defense official, told the Financial Times. He also went on to state, and I quote, the U.S. can't continue supplying Ukraine and Israel at the same pace. We're reaching a tipping point, close quote. And this appears to be a strategy to simply empty us of our armaments so that we are defenseless. And this takes me back to Prime Minister Mitsotakis of Greece refusing to give up his S-300 systems to Ukraine so they wouldn't get blown to bits in the field because he needed them for his own sovereign defense. Perhaps Mr. Mitsotakis knows something the rest of us don't. Moving on. Also from Lives of the Global South, this is a single charter show with the audience. And this is about the number of Americans who have a, quote, great deal, close quote, or, quote, fair amount of trust, close quote, in mainstream media. That figure has fell onto a record low of 31% as of this past week, ladies and gentlemen. And interestingly, if you look at this chart, prior to 2000, it was at 55%. And it's been on a consistent downtrend. And where did that downtrend really start to kick in? Well, it kicked in after the 9/11 attacks, 2001. If you look at this chart, there was a huge rush of euphoria and patriotism. And then came the police state policies. And then came the worsening economic situation and the fear-mongering. And by the time the 2008 crash hit, it went from 55% all the way down to 43%. From relative perspective, that was a pretty sizable percentage of its viewership just there. So that means that the mainstream media is almost half as popular as it was in 1999, which means that this institution is being exposed, or at least is being seen, depending on who you talk to, as a pariah and as essentially a propaganda mouthpiece of invisible people in the background. Anybody that wants to know about invisible people in the background, I encourage the audience to look into Operation Mockingbird. Moving on to our next talking point, and this also comes from Zero Hedge on Twitter/X. And this is about Bank of America charge-offs. They're the highest in over a decade, ladies and gentlemen. Highest since Q4 2013. And their provision for credit losses is also at 2008 levels. And, well, actually, it's the largest since the COVID lockdown. If you look back towards the 2008 levels, it's starting to get towards that point. So, it's a brief correction there. And what does this mean? Well, this is why Warren Buffett dumped Bank of America. Provision for credit losses is the highest it's been since the lockdowns, which means that the wars are having the same effects that the lockdowns were having on the economy, especially on major financial institutions. And I'll be going over unrealized losses later in today's show. Moving on to our next story, this is another brief infographic. And this one kind of says it all, ladies and gentlemen, about world affairs. There was a UN vote in 2021 where they wanted to make food a right. And this is the original source of this came from the UN. That's the source of it. And it came from an Instagram account at geo.ranking. So that's the source of this image. Now, in the description, it states, the right to adequate food is realized when every man, woman, and child, alone or in community with others, has physical and economic access at all times to adequate food or means for its procurement. The vote count was 186 in favor, 5 who did not vote, and 2 against. The 2 that voted against it, the United States and Israel. This would tell you all you need to know about who is responsible for the food shortages, ladies and gentlemen. It's a lot closer to home than they're saying. And we've got some really interesting stuff going on in Ukraine, ladies and gentlemen. I haven't covered Ukraine much in current times, but it's just as important to cover Ukraine versus the Israeli conflict, since they're very much interlinked and have concurrent players. But we're not going to go too much into who those players are in today's show at this time, because there's limited time. I need to get into some other points here. So here's the title of the article: Ukrainian Nazis to launch a coup against Zelensky, according to Forbes. Here's the leader, and this comes from Global Research, published on October 15th. Meli Kalon, a journalist writing for Forbes, warns that with a ceasefire, Zelensky risks suffering a coup from the Ukrainian far right over the issue of Donbass and Crimea. His piece is actually titled, quote, Moscow's hidden plans for exploiting a ceasefire with Ukraine, close quote. And a cursory reading might leave the reader with the impression that he is writing about some evil Russian plan to support a fascist coup d'etat in Ukraine. It is a little more complicated than that, though, if one's able to read between the lines. And Kalon argues that if Zelensky, quote, is forced to cede the occupied territories pro-term in exchange for promises of joining NATO, close quote, then, quote, ultra-nationalist elements of the army, quote, would, quote, revolt and stage a coup against Zelensky for giving away Donbass and Crimea, close quote. So let's examine this very briefly. So, forced to cede the occupied territories pro-term in exchange for promises of joining NATO. Well, Russia has already openly declared that NATO membership for Ukraine is off of the table. So, they're not really negotiating here, because Germany has already publicly stated that they have no confidence that battlefield victories are incoming, and they have refused to supply armaments as a result of it, because if they supply any more, they will fall short of their minimum requirements for wartime stock. And that's supported by domestic legislation, not just in Germany, but also here in the United States as well. So I want to head down a bit in this article, because there's some gesticulation and colorful language in this article that I want to try to maintain some objectivity here. Now, in an interview to Ukrainian news portal Obozrevatel, Yarosh, who is also a former commander of the far-right Ukrainian Volunteer Army, and this is in reference to Dmytro Yarosh, who is a former advisor to Valery Zaluzhny at the time, who was the commander-in-chief of the Armed Forces of Ukraine. That's who this is in reference to. He stated that the president would, quote, lose his life, close quote, and end up, quote, hanging on a tree in Kreshchatik, close quote, if he ever, quote, betrayed, close quote, Ukrainian nationalists by renegotiating, with Moscow to end the civil war in Donbass. Interesting. Well, considering that the ultranationalists have been photographed alongside troops from the IDF, including IDF troops or Israeli troops that were found in the Kursk region of Russia during the incursion, in which significant reserves were redirected from the Eastern Front for this incursion. This force has since been surrounded and is being chased down and is suffering very heavy losses. So it's interesting that they're putting this up there, because it's not like they have the weapons or the capacity to do anything else, so they're just going to engage in a similar tactic that happened after World War II, which is extensive use of guerrilla warfare. And I expect pro-Russian as well as Nazi agitators inside of Ukraine to start going after each other, because there are still people being kidnapped off of the streets, and this is probably a last desperate attempt to keep the conflict going. Because until the last Ukrainian means every single one, ladies and gentlemen, they intended to empty the country of Ukrainians. So this entire operation is meant to genocide Ukraine, and is being put a stop to, which is why this is incoming. The coup isn't necessary otherwise, because they've essentially lost the war. 1.8 million troops have either died, captured, or gone missing since the start of the conflict in February 2022. Moving on to our next talking point. Since we're not doing a live show today, it's a pre-recorded show. We're not going to show the video clip on this, but Republican candidate Donald Trump has stated that he will put 100% tariffs on countries abandoning the U.S. dollar as world reserve currency. And let's have a listen to what he has to say.
If a country tells me, sir, we like you very much, but we're going to no longer adhere to being in the reserve currency, we're not going to salute the dollar anymore, I'll say, that's okay. And you're going to pay a 100% tariff on everything you sell into the United States. And we love your product. I hope you sell a lot of it into the United States, but you're going to pay 100% tariff. He will then follow it up by saying, sir, it would be an honor to stay with the reserve currency. That will be like just playing. That's not even chess, that's checkers. But you don't have other, listen to this, you don't have other people that can talk that way.
This is a very bizarre comment from Mr. Trump, ladies and gentlemen, because how are you going to convince people to do business with you if you're tariffing them at a 2-to-1 ratio? You're essentially taking half of their, or maybe even more, of anything that they would make. You're discouraging them from doing business with you. So rather than working on integrating, rather than working on connecting with these systems, there's an effort to build kind of the simultaneous Fortress America situation, and that's probably who's in Trump's ear on this. I would say it's more likely that it's just a desperate attempt to intimidate countries from abandoning the dollar, but the dollar is only backed by a monopoly on violence, and the United States Navy is running out of munitions to protecting its ballistic missiles, which is why that terminal high-altitude air defense system was deployed to Israel, because they're running out of air defense systems. And as a result of dollar being abandoned as a world currency, 35 countries during the upcoming BRICS summit in Kazan, Russia, intend to dump the U.S. dollar. 35 countries, ladies and gentlemen. It's a significant portion of UN member states, which are approximately 190. So that's approximately almost exactly 20% of all UN member states. So that's a pretty significant percentage, ladies and gentlemen. And it might be a good idea to start loading up on precious metals, and that takes us into our next talking point. Gold spot reached a new all-time high of $2,714 an ounce. Price action shows that there was a a reverse head and shoulders breakout that has grown without stopping for breath with lots of green candles and very few red ones. And we are going to continue to see very high precious metals prices, well above $3,000 an ounce for gold, well above $40 an ounce for silver. They are coming. And what you're seeing right now is just kind of the preview for the big blow up. Because if the dollar loses its reserve status, we're going to see significantly higher precious metals prices. So keep an eye on that, ladies and gentlemen. Let's move on to our next talking point, which is also from Zero Hedge. And this is about, and I haven't talked about the Arctic dimension in terms of the Arctic shipping routes for several months on the podcast, so I think it's a good idea to revisit that. Now, here's the title of the article. Here's what's driving the Arctic dimension of the Russian-Indian Strategic Partnership. This is authored by Andrew Karibko on his Substack. And this is a quote from, there's a few quotes from the article. I'm just going to skip around. Rising Indian influence on the Arctic, serves as a counterbalance to China's, which means both Russian and Western interests. The Russian-Indian Joint Working Group in the Northern Sea Route through the Arctic Ocean, which is expected to become one of the world's most important trade routes, just held its first meeting last week in Delhi. It was formed as a result of Indian Prime Minister Modi's trip to Moscow over the summer, where he and Putin signed 9 agreements for expanding cooperation in diverse fields. And here's what's driving the Arctic dimension of their decades-long partnership: the ongoing Israeli resistance war, specifically, indefinitely suspended work on the India-Middle East-Europe Economic Corridor, the IMEC, and inspired the Houthis to blockade the Red Sea, thus raising the costs of Indo-European trade and highlighting how strategically insecure it's always been. India is therefore expected to use the NSR more in the future as a less risky route to complement the Red Sea one upon its reopening, thus adding context to the 4 points that will follow, based on those points in the article that I'm not going to speak to. But there's a reason why India saw a significant uptick in its economic viability and economic output, is because almost all Russian oil went straight to India, and they're getting it on the cheap. And they're going to be able to build out their economy in ways that are unprecedented. And they're expected to be the number 2 economy in the world in the next 20 years. So that Arctic Sea route is going to become a very popular trade route, ladies and gentlemen. Very popular indeed. Moving on to our next talking point, and this comes from Balkan Insight, which I referenced in last week's show about Albania's population decline. Well, this one is about Greece, which is Albania's southern neighbor, covering the area between the Adriatic Sea and the Aegean coast, as well as on its southern tips along the Mediterranean. And the title of the article is Greek Dock Workers Prevent Ammunition Being Loaded for Israel. Dock workers in Piraeus stopped a truck from North Macedonia carrying ammunition bound for Israel from entering the port, saying that they will not allow the port to become a transit point for weapons of war. Now, here's the leader. Dock workers gathered at the gates of Greece's largest port, Piraeus, on Thursday evening and prevented the loading of a container ship with a military cargo bound for Israel. One of the largest workers' unions in Piraeus, the Union of Cargo Handling Workers, abbreviated ENEDEP, called on the other port workers to prevent the truck, which came from North Macedonia, from entering the port, and its container of cartridges being loaded onto a Marshall Islands flag ship destined for Israel. Now, this is probably not just a moral standpoint on behalf of the Greek port workers, but also an economic one, because Hezbollah and the Houthis have already stated that they will start bombarding and attacking countries' ports that continue to supply munitions or anything else similar to munitions to the Israeli state. And Piraeus exists along the central eastern coastline of Greece on the Aegean, which is an extremely important shipping route. It's also a choke point. The Aegean, the Bosphorus, these are choke points, and they would stop significant percentages of global trade if there were any problems with them. And this is very interesting because with so many of Israel's ports coming under bombardment or blockade, it's going to be very difficult to get munitions to them unless they're in military convoys, specifically naval convoys, to get to those areas, if they can be unloaded at all. So I expect that there will be more of these actions happening from port workers all across the world. Something else happened earlier in the year in Bulgaria where there were some words painted on what appears to have been an Abrams take saying, quote, "murderers go home," close quote. So the image and the soft power of both Israel and the United States are rapidly declining on the world stage. And this is both good and bad for America and Israel. And the bad part is that we're going to see significant economic drawdowns. The good part is that the militarized warfare state is coming to an end because it's no longer economically viable. Moving on to the next talking point, and this is from Live, Love, Fruit. This is an important article, ladies and gentlemen. It's entitled, USDA Organic now allows glyphosate in organic hydroponic food production. And that's rather alarming, ladies and gentlemen, because the entire labeling industry and the effort that's gone into this is under assault. These people don't want you to know what you're buying. In prefacing this article, California recently passed a bill that would ban putting sell-by dates on food. There were no sell-by dates on food in the Soviet Union, ladies and gentlemen. They did it on purpose so that you would just grab whatever rotting, sack of meat was still on the shelf. And they claim it's to, quote, reduce waste, close quote. It's not about reducing waste. It's about ensuring that people don't have fresh food to eat. And it's also about an assault on farms. Right? So I expect more civil disobedience to become the norm here, as well as more people sourcing their food from alternative sources because they're not going to have any other choice in the future. Now, this article is rather old. Okay, so it was published in 2019, November 11th. 2019 was the last update. The initial publication was on November 4th. So this article is actually 5 years old, more than 5 years old, ladies and gentlemen. But I wanted to remind the audience of this because that means that we've had glyphosate in hydroponic food production for at least 5 years' time. And glyphosate is a well-known cancer-causing chemical. And Monsanto has lost multiple lawsuits in many states as a result of this. So it looks like Monsanto is just deciding to take the lawfare approach by infiltrating state governments in a desperate attempt to keep their business up and running, up and going. And I'm just going to speak to one quote in the article, and this is in regards to an email, a long email that addressed this particular situation by Dave Chapman, who's the executive director of Real Organic Project. And he's explaining how Foganic produce, which is a play on organic, Foganic produce, is being sold to unsuspecting consumers. Quote, "I have been hearing for months that glyphosate is being sprayed on fields about to be certified organic for hydroponic berry production. The way this use of herbicide is incorporated into, quote, organic, close quote, certification is to laser level a field. Compacted into it is like a parking lot. Wait a little while until the weeds that slows follow disturbed soil have germinated, and then spray it with an herbicide. They're doing this in California and Florida. The weeds in Florida are fierce and can grow straight through the black plastic. Weed control and organic blueberry production is the biggest challenge. Being able to spray glyphosate and sell it as organic is an enormous economic advantage," close quote. Well, actually, this is not true, ladies and gentlemen, because, or at least dubious from my perspective, because genetically modified super weeds have been known to Monsanto as well as to farmers for generations now. And it's been a problem since the 2000s at least. So it would be a good idea from my perspective to start growing more rather than less of your own food, ladies and gentlemen. And speaking of less We got one more talking point to wrap up today's show, and this is about unrealized losses on investment securities at U.S. banks. And the source of this is the Federal Deposit Insurance Corporation, and it tracks it in billions. And we've got two different colors of this bar chart. Blue is held to maturity securities, and the tan is available for sale securities. And the note on this chart is as follows: insured call report filers only. Unrealized losses on securities solely reflect the difference between the market value and book value of non-equity securities as of quarter end. And if you look at this chart, starting in late 2021, we started to see unrealized losses on investment securities, and they are now 7 times higher than during the 2008 financial crisis, and reached a peak drawdown in between 2022 and 2024 of negative $675 billion. Just to put this into comparison, in the drawdowns after the 2008 crash, they reached a peak low of approximately $65 to $75 billion in the red in terms of unrealized losses on investment securities. So we're going to see a pretty significant number of major bank failures in this country as a result of these unrealized losses. It's only a matter of time. Get your money out of the banks, start getting precious metals, and find your entries, ladies and gentlemen, because once those countries start dumping the dollar at the BRICS summit, expect to see crypto and precious metals go insane. We are very close to the time when these assets are going to start moving, and this is from my perspective, it is a once-in-a-lifetime opportunity to change your circumstances permanently. And with that is the end of my talking points, and we'll shift over to Mr. Jason Bruce for his technical analysis.
Awesome. All right. Thanks as always, Chris. Good stuff. So let's bounce over and see what we got here. I want to see what the S&P is doing. So we should have just opened up on futures a little while ago. And before I jump in too far, folks, thanks for listening to the news with Chris and for joining us today. So if you've made it this far and you haven't for any reason, please honk the like button for me. If you're not, make sure you're subscribed to the channel and hit the bell for notifications. And I'm going to jump into some TA and analysis here. So this 4-hour, you can look at this wick as an outlier, or you can look at it as whatever, but this really just looks like one of these ascending type of a triangle patterns that we've been seeing the market print quite a bit. So it looks like continuation for the S&P here. I mean, you might get a bit of a retracement to the lower part of this wedge here in the 21 MA on the 4-hour, so maybe like 58.90. Otherwise, you're just breaking out of this. Measured move on your flag is going to be something like this. At 61.23. Maybe by the end of the month. Keep an eye out for that for the S&P. All right. Let's kick over to Bitcoin. Let's take a look at how the daily opened up. I don't want to scare anybody. I know we're getting pretty close to Halloween, but hey, how we doing? How we doing, folks? How we doing? All right. So the daily picture for the Bitcoin futures, guys, might be getting a little cooked on our daily here. you're certainly, overbought on your stochastics. Doesn't mean this rally can't continue for a few more days, in that regard. But right now it looks like a little bit of sideways. So if we drill down a little bit here after the pump, there's definitely bearish divergence here. So be careful with that. All right, definitely bearish divergence. These whales would love nothing more than to dump this thing all the way back down to these zones here. Bounce off the 200. 200 MA on the 4 hour here. This purple line bounce off the 200 daily and this point of control and then take off. So are people going to book profits for the month now? It's totally possible. I know of a huge whale, one of the best traders out there, to be honest, and for several years was the best trader on Binance percentage wise. He's short, and he's been building a short actually since like the low 60,000s. So he's just continually built that up, and I mean, this guy has the money to just keep doing that. But you might get a little short play out first before the market really takes off. So zones to look at. If the market's going to be really bullish, it's going to stay in this area here between about 64 and 65.5. If that area breaks down, look for your golden pocket and your point of control. That's around 62.5 to about 62.8. Below that, there is support at 60.7, up around the area of about 61.9. All right, so those are areas of interest for BTC. Use your Fibonacci, and it will give you an idea of what's actually going to be happening there. All right, so it's this bearish divergence that has me concerned. RSI denied at this level here, as we peaked out in this price action, a much higher price action than we are on the RSI. So this bearish divergence has to be heated. Okay, so either we stay sideways, and in this flag, okay, now if this flag holds, if everybody decides it's time for October and this flag holds, or if there's just a brief downside fake out, little liquidity grab, whatever, your measured move is pretty close to 80 G's, 79,860. Okay. Keep in mind that's for futures. It's going to vary a little bit on spot. I'm going to jump over to BTC USD on Bitstamp for the weekly candles. All right. And this long-term trend line support turned resistance. Looks to have now flipped back into support temporarily, as we did have consolidation below. And we now have moved up above. So realistically, with where the oscillators are at here, stochastics are in a position of strength, RSI is in a position of strength, price action is in a position of strength, and above any key resistances. So what this tells me is the next major move is in play, and keep an eye out for that. Could easily be 100K plus for BTC. All right. Over to the US dollar index chart. We just got a few other things highlighted here. I did do a video on this prior, but I just want to give the absolute bullish prediction for this run. I think you're looking at, $364,000 is like my absolute high bull case, massive, you know, type of FOMO. I honestly don't think that's going to happen. I think these targets here are much more realistic. Just around 100,000, or as I was looking at on this one, maybe just north of that, 104, 113,000. Okay, but if we get very, very bullish, and there is an exceptional amount of institutional interest, I do believe this is possible. Okay, I do believe that's possible. And maybe we see something just a little more like this, you know, 216K, 175K, somewhere in that area. All right, so we're going to start looking at these larger predictions as the market starts to heat up. All right, so let's zoom in a little bit. 1 hour on Coinbase here. We're getting bearish divergent. So you got to drive a bearish divergence here. And you're looking at some like right there. Okay. So that does tell me the market needs some type of a correction. On 1 hour chart here, stochastics are losing strength. You're about to lose the 50 level on the RSI. You're losing the 21 MA. Take a look at the 4 hour here. You're definitely heavily bearish divergent, but the thing about it is you're so close to the 21. So, you know, 68,276 could hold. You know? And then again, like this is your flag here. All right. And then it would be a big move. It would be a big move. It would be that big FOMO move up to that area. So I had that mapped out already based on like some head and shoulders and triangle action. So this triangle pattern here, depending on how you slice it, if this was a W pattern I was looking for, then it would have pumped all the way to potentially like 85K. That looks likely invalidated. So if that was this symmetrical triangle breakout here, that's about 80K. And, you know, measured move of this flag here again, that's coming in around 78.5. All right, and then you could see, you know, another little fake out move you up to that 80 Gs, come back down, and maybe get like a slam back down to like that 70K area, liquidate some people. Okay, we're gonna see some wild stuff here, folks, over the next few days. All right, next few days, weeks, and months. All right, it's gonna get really, really crazy. You're gonna see hefty pumps, and you're gonna see pullbacks, 10%, 20%, to wipe out leverage in the market. Okay, so just drilling down, like really, really drilling down right now. You have lost the 200 MA, the purple line on the 1 minute. You say, Jason Bruce, you're on the 1 minute chart. That means nothing. Well, no, you're wrong. A lot of the time when you lose that 200 MA, you become bearish for a time until you're able to confirm some time above it. And you can see here that purple line 200 MA was lost here. Came back above, consolidated, but you've lost it again. All right. So what are you doing right now? Well, it's kind of a descending triangle. Okay. It's a descending triangle. Typically has a bearish bias. Breakdown would actually be pretty nasty. And it would take you down to this next area here, around 67.8. And if we take a look, lo and behold, what is this that's happening here? This is a potential breakout and retest in progress. All right. So let's keep an eye out for this pattern. Okay. I'm going to bounce back to Coinbase. Might be a little bit clearer. Let's keep an eye out for this pattern here. And the retest of that. So it could actually be something like this, where this triangle is a little chubbier here. And this is actually going to be your breakout, and then we're going to get the retest back down. Okay. But this looks a little more aggressive in terms of how that might play out. So where was this line coming from? So that's the larger line. All right. That's kind of the larger breakout line here. This is going to be super interesting, folks. Keep in mind, nothing I'm saying here should be construed as financial advice. I am not a financial advisor. Get yourself a financial advisor. Do your own due diligence and research before jumping into any coin investment project or trade. Okay? I'm just showing you what I'm looking at and what I'm doing. And, you know, it may be a little messy for you. It may not exactly be your cup of tea or your secret sauce, okay? But this is mine. I do my best to try and show you what it is that I'm doing and what I'm looking at, okay? So right now the only active long position trade that I have open is actually in BNB. I do not have a Bitcoin, Ethereum, or Solana trade open. I was scalping Solana all weekend and did pretty good there on about 450% returns over the weekend on my scalps. Just flipping over to BTC dominance, we've moved up into this box that I had highlighted once again. However, it looks like there's some bearish divvy, just some slight bearish divvy that came in this dominance here. So, you know, again, we're in like a flag or a uptrend channel or whatever you want to call this. This could break down, maybe see some alts run if Bitcoin moves sideways a little bit, just short term. All right. Tether dominance. Tether dominance. This is kind of interesting because there's like this, it's an ugly pattern, but it's a pattern nonetheless. So like, is it here? Yeah. So it's something like that that's going on for Tether dominance. And could see a little bit more of a move come out of this before the market figures out the trend direction. And look, that's going to come right back up to that POC. So that would be a great place for that to be denied. All right, for Tether dominance, let's flip out a little further just so we can see, because I'm curious. See, now you're heavily bullish divergent on the 4 hour. Look at this. Okay. So to explain that further, swing down in price action, higher on the RSI, lower on the RSI here, much higher on the candles. This type of divergence typically is going to induce a pump at least to the 21 MA and POC. And if the market wants to be a little bit more finicky about what happens here, you have these areas here, 50 MA, 200 weekly, and 200 MA pointing down here at about 5.5% dominance for Tether. You know, if you were to see something like that, a move like that, it will wipe out a lot of leverage in the markets. People were asking me what they should be buying today in the Discord. I told them nothing because the market was pumping too hard. wait for a little bit of pullback here first. As you can see, Tether is going to make some type of a move. Either it's going to make a move back up to the 21 like it did here and come back down, or it's going to come back up and range a little bit further before we see further breakdown. Don't be surprised if that happens, because people are going to try to peel profits off this month, try and reposition themselves for the bull run. Don't be shocked if the rest of this month turns just a little bit sideways to bearish before we really get going, because what's coming up in just a few weeks, well, it's the election. So people may be hedging their bets and a little uncertain with everything that may be happening this election season. God only knows what's going to happen, the chaos that could ensue if any sort of a false flag, God forbid, is implemented. Just pray for everyone, folks. Pray for our country, for God's sake, at this point. Like, what is really going on, you know? So, really, to sum this up, what I'm seeing here is you're probably going to see some market volatility, and you're going to see a little bit of a potential sell-off here, I think, before the election and before the end of the month. So be careful. If it's not going to be a sell-off, you're going to see a hefty pump. All right, it's going to be one or the other. You're gonna get some dumpage and range bound, or it's going to be a really hefty pump, and the market's going to leave everybody behind, and the bears are going to completely freak out because we're going to be in that new all-time high territory, and maybe we see that FOMO at that point. So let's be open-minded to these scenarios as we move through these, different assets and different indicators and the different charts that we're seeing. A lot of the time we can see those tea leaves and we can have an idea or a probability of what's going to happen, but it's always ultimately up to the market makers, right? So that said, let's flip over to the total 3. The altcoins are trying to do something here on the daily chart. We did have a breakout of this head and shoulders here, breakout of the 21 MA, breakout of the 200 daily. Price action is above all key resistance at this time. You are seeing a little bit of a bearish candle form here. The hopes would be this is just sideways price action. That's a little bit of a concerning type of a doji that we're printing there, so maybe we need to see a little bit of a cool off, like I was saying. Come back down to this area, retest the 21 and the 200 weekly. Or excuse me, that's just the 21 here. I'm sorry. I've got two 21s up there. So I've got a set of moving averages and the Bollinger Bands there. So those kind of correspond in terms of the 21. So where's our 200? It's all the way down here. 200 weekly is all the way down here. Revisiting that, highly unlikely. Excuse me, folks. Sorry, I'm recording this pretty late. Pretty long weekend. A lot going on. All right. So let's move over to Ethereum. 3-day chart. Ethereum BTC. Bullish divergent. On this longer term, going all the way back here, and then there's actually another drive of bullish divergence that just came in here. This just confirmed for us these last few candle prints, and if you can see right here, I'll blow it up just a little bit so you can see a little bit better. This closure here, this tweezer type of bottom, lower than this one, right? But you can see here, you're higher on the RSI, lower in price action, lower on the RSI, higher in price action. These are the things you want to keep an eye on, folks. All right. Move for Ethereum could be coming, or at least a move for Ethereum versus Bitcoin. If we take a look at what Ethereum is doing versus Tether, moving pretty good versus the US dollar since we bottomed out here and bounced off the 200 weekly. Had a number of wicks down. Nice clean bounce off. And now price action is sitting just shy of $2,800 as of the time of this recording. All right. I do see much bigger moves coming for Ethereum. I did cover that on the last podcast. None of what I'm thinking about has changed. Okay. I am still looking for much, much higher price targets. Your first interim, like, new all-time high price target, probably around $5,300. And I do see Ethereum going much higher, 7,300, 8,500, and potentially as high as even 15.5 or around $18.9 thousand for this bull run. All right, so shorter term, four-hour. Same thing we saw for BTC. Bearish divergence. Expect consolidation. Okay. And it could just literally be as simple as, like, we retest this flag at the 21. 21 comes up, retest the flag, take off. Measured move would be something like this, just above $3,000. And lo and behold, look what's up here. This is a 200 daily moving average curving down. Flip that into support. And Ethereum's going to go on a bull run. All right. So if you're not in ETH right now, I don't know. Why not? Yeah, this is looking like it's going to just be a nice clean breakout and retest. So we'll keep an eye on that. You know. Excuse me again, folks. Sorry, about 2665 area if you're looking to load up on ETH. Okay. Binance coin, third largest cryptocurrency by market cap. Holding a long position here. Been holding that long position since $235. So yes, I am up. It's a slow moving coin at this point. So I'm having to be patient. Not worried about that. So God bless America. Excuse me. So what we're seeing here, most likely, I did highlight this last couple shows. Inverse head and shoulders. Next target around $890. Probably be looking to take some profits around that time, but we shall see. Basically, it brings me right up to where the spider line is at. Just obvious place to take profit. Yeah. So that's what's going on for BNB, and honestly, like, if we zoom out here, this is one that'll probably keep going a little bit further. BNB does have a burn mechanism, so people might not necessarily be thinking about it as a coin that, you know, could have done a 20 plus X if you'd have bought it at the bottom, but if you would have bought around, you know, 200, 250 bucks, if this thing goes to $5,000, it's a 20X. So just keep that in mind that this coin does still have some potential to move. It could even move further than that. I mean, I don't want to speculate too much, but depending on how this market swings, we could see it move higher. So, you know, likelihood of what we're seeing here in a larger perspective is something like this. All right. And once this larger macro wave 5 plays out, well, then we may need to get a much larger retracement. Who knows? If we see like a macro type of a retrace, for the market, you could come back down to like this level, like around 1200 from like 5500. All right, so that would represent a significant dump in typical crypto bear market, right? So that's BNB. Moving over to XRP, short term, 15 minute. This is bearish price action that I said would probably be coming in. So short term, expect a little downwards to sideways price action. Come back to 21 MA or potentially 200 daily. My goodness, my goodness, my goodness. And yeah, you got your 200 MA up here like around 56.5 cents. Break out of that, you can see XRP start to fly. Okay. Got a volume gap up here. Volume gap is up to about 58 cents. Above that, 200 weekly is the major resistance there. That's at around 61 cents. You can break out of that, you got a real good shot because you're looking at something like this, and you can see here where this 200 weekly moving average is like directly in confluence with the golden pocket. You can pump up to like 786 and potentially flip that into support. You'd be looking pretty good for XRP. I do still hold XRP. I do still believe it'll do numbers in this bull run. It's sitting around 50 cents right now. Could easily go to $5, $10, or even much higher. 12, 22, 33, even $200. I actually do think is technically possible this bull run. I don't see any higher. That's absolute bull case for XRP this run, $200. Okay, and from where you're at right now, it's a pretty good move. All right, that's a pretty good darn move. It's highly unlikely, to be honest, but it is possible. It is possible if certain fundamental events take place. I'm not going to get into any of that stuff right now. Okay, but XRP consolidating along with the rest of the market, just like everything else. Moving over to Kaspa, 1 hour. Actually trying to find some support here for Kaspa on the 1 hour. So a little bit of a flag. Most people would call this like a rising wedge, rising channel, bear flag, something like that. You could look at it another way. Okay. Let's see, where is it? Let's see if it'll give it to us. Yeah. Oh, look, and you're getting the retest now. You're getting the retest from the 21 and the 200 MA. On the 1 hour, this actually looks bullish, dude. This actually looks bullish, so like, it just depends on how you're cutting this stuff up, okay? There's a lot of different ways to do this. Some are certainly better than others. This is kind of how I've learned a majority of my stuff here. Okay, but look, you get a nice confluence with the pump up to this area, that area that I pretty much had highlighted there, like around pretty close to 14.5 cents for Kaspa. I would look for this move, very probable if you're looking to take a little long position on, just into Tuesday. And very popular analyst, Eric Crown with a K, he talks about probabilities and percentages. He's been talking about opening up a long trade at the start of trading on Mondays, and likelihood of that playing out has been like above 60%. If you're using risk management, that becomes very profitable over time. So the idea being here that Kaspa would move with the rest of the market. If the market's going to go long, pretty much at the start of Monday, You could take this long trade here on the retest of the 200 MA and the 21 MA on the 1 hour and potentially get a move out of this inverse head and shoulders. Again, nothing that I say here should be construed as financial advice. All right. Aerodrome Finance, we are getting the retest of this breakout. There was an ascending triangle, had a breakout, now we're seeing a retest at the top of this pattern here. Depending on how you slice it, it's somewhere in here. You may get a little bit more of a move down. And, you know, maybe you'll even come down a little bit further. You got 200 MA here, $1.14. 200 daily, 98 cents. I know I did hear some talk about this range earlier today. Seems unlikely, as we're now becoming heavily hidden bullishly divergent. As you can see here, this swing down on the RSI much higher than this one, however, much lower on the price action. All right, and much higher over here, also corresponding with the retest of this pattern. When you see these divergences correspond with retests, could be an area to load up around $1.27 for Aerodrome. I have discussed that I do see Aerodrome going much higher. It's like a swing measured move target. That was odd. Maybe $3.25, somewhere in there. So you could easily double up, take some profit, let your free bag ride on Arrow. I would say if you're loading up here, you could try to look for lower prices. Okay, if we're going to see that larger dump at the end of the month that I had talked about, this POC is a very attractive area, 65 cents. That would be wild if the market dumped 50% before we really pumped. Okay. I would say if the market's going to be moving bullishly, this area is going to hold. This 0.5 fib around 98 cents corresponding with the 200 daily moving average. And if the market's going to stay really bullish, you'll hold this 382 fib and bounce back up of the 200 MA. That's going to be like, you know, $1.10 to $1.15 area. So should you be averaging into Aerodrome if you're planning on buying it? Yes. In one word, yes. I can't predict these scenarios. It's made a large move off of a Adam and Eve breakout. And if you just look at the structure of the Adam and Eve, where a potential retest of that could occur, it would be somewhere in this area, which again, you know, it's pretty standard retracement. All right, so that's just above this point of control, again at 65 cents, somewhere in the area of about 72 to 75 cents. So these can all be attractive areas. All right, you could see Aerodrome settle on any one of those levels before it pumps again. Okay, let's keep going. Solana, 30-second chart. I feel like I want to long this, so I'm just going to take the long position. I don't have it up on my desktop right now. I apologize, but I am taking the long on my phone. All right, 169.41 entry, and we're already in profit, folks. Just going to show you that if you can see it here. I don't know if the camera can even pick that up, but that's what we're looking at on weeks. WEEX is where we're trading. This is a small position, about $360 in the margin. All right, so Solana. Why did I take that trade? How did I even see that quickly? Jason Bruce, are you insane? Yes, but We have this 1 minute bullish divergence. I've been scalping the 1 minute with Solana for the past 48 hours. So we'll see if this will hold up or if it'll make me look bad. All right. And I'd stop myself out somewhere around here if it came down. All right. So let's take a quick look, see what happens. Dun dun dun. I'm sure the suspense is killing you all. So let's move out on Solana real quick. I may actually be an absolute idiot for opening this trade. Maybe not. There, we got that little bit of green candle printing there. Good Lord. That's just so wild. So if we look here, there's even more hidden bullish divergence. Like, it's just right there. It's so obvious. Lower swing down in price action, higher on the RSI. Higher in the price action, lower on the RSI. Okay, so let's see if it plays. Let's see if it plays. All right. And Solana did make a larger move earlier today. I did manage to catch a piece of it. I didn't catch all of it, so I was out on the boat fishing. All right. So there's no bearish divergence on the 4 hour, which is super interesting. It means that Solana might just move sideways. But you're super cooked on the oscillators, so, you know, to think that it wouldn't come back down a little bit and retest some of these areas, maybe 157, 160. Who knows, folks? Market's getting really bullish. We're starting to get cranked up, so, you know. Yeah. So that's what's going on right now. I am actively trading the market right now. Just scalp, scalp, scalp. And hope for the best. Based on what we're seeing on the smaller time frames and divergences. All right. Moving on. I was looking at NVIDIA. I was just curious because one of the folks in the Discord posted something on Facebook. They said somebody went long from here, which looked horrible when you looked at the chart that was posted, but you have to really understand how to like start to disseminate this information. This right here actually is potentially an ascending triangle bull flag, and 226 would be the breakout target for NVIDIA somewhere around the end of November. All right. So I actually think that's quite likely. If you were to see a breakdown, this area here at the 200 daily would be likely to hold you up around $100. Okay. So I wouldn't anticipate that too much. Bonus coin, end of the show. Almost done, folks. I gave you S-Doge, folks. I gave you S-Doge. It hit the target that I had outlined here. All right. I'm riding a nice free bag of this. Took back all my Solana that I put in. And I'm just, you know, bull market. Doge on Solana. S-Doge. SDOGE is the ticker. Check it out on Dex Screener. You're going to want to hook up your Soulflare wallet. Send some Soul over there. May want to wait for a little bit of retracement here, or maybe not. This hourly's trying to do something. This hourly is trying to do something. So if we look here, this was your swing down right here. This was your lowest swing down. So this is the swing on the RSI you'd want to look at. And this is actually hidden bullish divergence. This is implying continuation pattern. If that's a bull flag, you're in a big pump. Oh, look, right up to that area I had measured out at 1432. You're currently at 4318, so that's, 2.5x from here, folks. 2.5x coming out of S-Doge and more. All right. I told you to get in on this one, folks. Told you to get in. I bought this thing in here. If I'd have seen the alert for it, I could have got in much, much earlier. But unfortunately, I don't scroll Facebook constantly, and I was probably an hour or so late seeing that on a Facebook group. So that actually ended up costing me thousands and thousands of dollars. But I still made a few grand on this, and I'm holding a free bag. So I will take that and run with it. And I am also going to run right now. If you made it this far, really do thank you. If for any reason you didn't, on the way out, please make sure you honk the like button. If you're not subscribed to the channel, hit the bell for notifications. That way you'll be notified when we bring you broadcasts in the future. And folks, I really do love you. God bless you all out there. I hope that you're ready and that you're positioned for this bull market. It's going to be absolutely fantastic. I want to be there for you every step of the way. So take care of your folks. Take care of yourself, folks. Excuse me. Very late over here. I'm actually finishing this up at about 3 a.m. So much love. God bless. I'll be talking to you soon. This is Crypto Clown World. I'm Jason Bruce. Honking on out of here. Take care.